Good morning, everyone. My name is Flavia Cavalcanti, and I'm pleased to welcome you to this 12th panel of the ABDF International Congress. I will not take much time in this introduction since we have a very tight schedule, and I'm having the pleasure to chair this panel, which is filled with top-notch professionals who I deeply admire, and who will be covering very interesting and important topics on recent developments in international taxation. So very briefly, I'll just thank you all of our audience and our speakers for joining us today, and also to congratulate the local organizing committee for putting together such an excellent event. So without further ado, I'll hand over to João Félix Pinto Nogueira, who will be addressing a very well-known case, but maybe not fully understood in its procedural intricacies and effective repercussions. João is a deputy academic chairman of IBFD, professor at the Portuguese Catholic University and visiting professor in several other international universities. Additionally, João is a very active member in our dearest International Fiscal Association, acting among other roles as a member of the Permanent Scientific Committee. So today, as I anticipated, João will be talking about the Apple case, and since he will be presenting his topic in Portuguese, I switch languages now. Então, João, é um enorme prazer ter você aqui hoje com a gente. Como a gente fala aqui no Brasil, a bola está com você.
Muito obrigado, Flávia. Muito obrigado à organização pelo muito simpático convite, ao Gustavo, Marcos, Andrea, todos os amigos da ABDF. Vou agora, que estava a esquecer, vou colocar o meu cronómetro para não exceder o meu tempo. Tema que me desafiaram a apresentar foi o do caso Apple. E eu achei que a melhor forma de abordar o tema era destruir alguns mitos que nós concebemos sobre o caso Apple. Porque já ouvimos falar muito do caso, mas não percebemos muito os detalhes do caso, ou mesmo as consequências que ele possa ter para o Brasil. Portanto, o objetivo da minha apresentação é percorrer o caso, perceber qual é o impacto para o Brasil e destruir alguns mitos. Começo de imediato com a primeira questão. Porquê é que estudar este caso interessa? Porquê é que é importante estudar o caso Apple? A Apple economizou bilhões de euros em impostos ao longo de anos. Não por meio de fraudes ou de esquemas ilícitos, mas simplesmente explorando ao máximo as regras fiscais existentes. Em 2016, e depois de vários anos de investigação, a Comissão Europeia decidiu colocar termo à estratégia da Apple, exigindo que a Irlanda recuperasse 13 bilhões de impostos não pagos, mais juros. Ao que tenho conhecimento, trata-se do maior valor de cobrança do mundo e de sempre. Mas como é que a Apple estruturou esse planeamento? E porquê é que a Comissão Europeia decidiu pedir à Irlanda para cobrar 13 bilhões de euros, ainda que nenhuma regra fiscal per se tivesse sido violada? É isso que vamos explorar nesta apresentação. Começaremos por analisar o esquema da Apple, as decisões da Comissão Europeia, dos diversos tribunais europeus e depois analisar criticamente a decisão, analisando também o impacto da mesma para o Brasil. Então, como era o esquema de planejamento da Apple? A estratégia usada pela Apple, a estratégia de base, era semelhante à Double Irish, que toda a gente conhece. Mas tinha algumas nuances. Quais eram essas nuances? Primeiro, a Apple Incorporated, que nós conhecemos todos, do Cupertino, criou duas subsidiárias irlandesas, a Apple Operations Europe e a Apple Sales International. A chave era que, apesar de incorporadas na Irlanda, elas eram geridas e controladas fora dela. E do país onde elas eram geridas e controladas, nesse país elas não eram residentes. Portanto, para efeitos comerciais, estão a ver o slide. Para efeitos fiscais, estas Apple Operation Europe e Apple Sales International não eram residentes em lado nenhum. Nem na Irlanda, porque não havia o Management and Control, nem no país onde eventualmente existisse o Management and Control, que não faz parte do procedimento da Comissão. Segundo, estas subsidiárias operavam não diretamente através das casas-mãe, mas operavam através destas bolinhas, dos estabelecimentos estáveis. E esses sim, fisicamente situados na Irlanda, esses sim, dotados de substância, esses sim, com trabalhadores, com computadores, etc. A chave deste esquema era a propriedade intelectual, que é isso que dá valor à Apple. Então, como é que a propriedade intelectual saía dos Estados Unidos e era utilizada na Irlanda sem haver aqui uma transferência de recursos? Muito simples. A Apple Incorporated, de Cupertino, celebrou um cost-sharing agreement com a Apple Operations Europe e com a Apple Sales International, que permitia uma partilha de custos e a utilização por ambos da propriedade intelectual. A Apple para o mercado americano, a Apple Operations Europe e a Apple Sales International para o resto do mundo. Mas então, as vendas do resto do mundo iriam para estes estabelecimentos estáveis e eram tributados, certo? Não. Porquê? Porque a Apple e estes estabelecimentos estáveis obtêm um ruling, um pedido de informação vinculativa da Receita Federal irlandesa, o qual diz: vocês não têm de tributar pelas vossas vendas reais. Vocês podem tributar através de uma espécie de TNMM ajustado. Vocês podem tributar a partir de uma margem, um markup sobre os vossos custos operacionais. Portanto, as vossas vendas não interessam para nada. O que interessa são os vossos custos operacionais e vamos aplicar um 0,65% e isso é o vosso lucro tributável. A Comissão Europeia, na sequência daqueles escândalos todos, decidiu começar investigações e disse: ok, nós não podemos interferir em fiscalidade direta porque nós não somos um ente fiscal, mas nós achamos que aqui há auxílios de Estado à violação das regras da concorrência. Porquê? Porque os rulings concedem uma vantagem seletiva que não está disponível a quaisquer outras empresas e, portanto, estão a distorcer a concorrência. E como é que distorcem? Que há uma violação do arm's length. Estas regras não são regras de mercado, não são preços que empresas normais acertariam. E, portanto, se não houvesse este arm's length, esta relação especial entre a casa-mãe e as subsidiárias, não era normal que a maior parte dos lucros passassem para estes entes que não estão situados em lado nenhum. Claro está, a Apple e a Irlanda recorreram para o Tribunal Geral, que é o Tribunal de Primeira Instância na União Europeia, e disseram: não, os rulings são absolutamente legais. A Apple pagou o imposto devido de acordo com a lei irlandesa, não há seletividade, qualquer empresa irlandesa teria o mesmo tratamento. Há aqui problemas de retroatividade, nós vamos já ver a seguir, eu já vou trabalhar estes problemas de retroatividade, porque vocês estão a calcular lucros com base em documentos que não existiam na data dos rulings, nem na data dos factos. E existem vários problemas processuais. Eu estou a tentar ir rápido na decisão para depois investir um bocadinho mais de tempo no exame crítico. O Tribunal Geral diz: a decisão da Comissão é nula. E porquê que é nula? Nós até aceitamos que o arm's length pode ser usado para verificar qual o lucro efetivo dos estabelecimentos permanentes na Irlanda. No entanto, a Comissão não provou qual seria o lucro normal de acordo com esse critério de arm's length. A Comissão simplesmente atribuiu tudo aos estabelecimentos permanentes. E, portanto, não fez o trabalho de casa e a decisão é nula. Em geral, foram estes argumentos essenciais. Obviamente, a Comissão Europeia não gostou de perder e fez recurso. Mas, estranhamente, só a Comissão Europeia fez recurso, não a Apple. Porque a Apple tinha perdido em alguns pontos, nomeadamente o primeiro, que o arm's length podia ser aplicável. A Apple dizia: o arm's length não está na lei irlandesa, portanto não pode ser aplicável. A Comissão Europeia disse: mesmo assim pode ser aplicável. A Apple não recorreu dessa parte, a Comissão Europeia recorreu da outra parte. Então, qual foi a decisão do Tribunal de Justiça? O Tribunal de Justiça decidiu anular a decisão do Tribunal Geral, por um lado, e não devolver ao Tribunal Geral, mas decidir no mérito. Portanto, a Tribunal de Justiça anulou a decisão do Tribunal Geral e, em geral, isto iria baixar outra vez à primeira instância, mas não, decidiu no mérito. Então, quais foram os erros detectados pelo Tribunal Geral? O Tribunal de Justiça da União Europeia. O Tribunal de Justiça da União Europeia, como vem no slide, disse: ok, não há aqui uma abordagem de exclusão. A Comissão Europeia fez o trabalho de casa. Ele verificou quais eram as funções, ativos e riscos no estabelecimento permanente, quais eram as funções, riscos e ativos na casa-mãe. Não viu nada na casa-mãe, portanto atribuiu tudo aos estabelecimentos permanentes. houve um exame bem feito de preço de transferência. Segundo, apreciação da prova. O Tribunal Geral disse: a Apple não apresentou as provas à Comissão. Depois apresentou alguns e-mails, algumas board meetings, minutes, algumas power of attorneys. Mas isto não foi apresentado quando tinha de ser apresentado, que era na fase administrativa. E o facto de terem apresentado ao Tribunal de Primeira Instância não pode ser tido em conta. Portanto, vamos analisar um dos problemas de ter perdido é isto, a da Apple não ter cooperado logo no início. Terceiro, a aplicação da lei. O Tribunal diz que o Tribunal Geral de Primeira Instância considerou a atividade da Apple Incorporated, que é uma terceira parte, não pode ser, é apenas uma relação de estabelecimento permanente de casa-mãe, que está aqui em questão, e, portanto, e por último, o ónus da prova, achou que o Tribunal Geral foi muito irrealista em termos do ónus da prova que exigiu à Comissão. Quanto ao mérito, muito brevemente, o Tribunal de Justiça disse: há uma vantagem seletiva, os passos para demonstrar a vantagem seletiva foram seguidos, não há problemas de segurança jurídica e retroatividade, não falou bem da questão que tinha sido levantada pela Apple, que ela não tinha recorrido, e portanto disse: na jurisprudência do Tribunal já existe jurisprudência que permitiria antecipar esta ação para auxílios de Estado, um bocado duvidoso. Que a autonomia fiscal da Irlanda não estava posta em causa, ela podia desenhar as suas regras tributárias, a única coisa que tinha era de respeitar os critérios das auxílios de Estado, que são regras europeias, e que a motivação da decisão da Comissão foi correta. Foi bem motivada a decisão, portanto, no final, anulou a anulação do Tribunal Geral e repristinou a decisão da Comissão. 13 bilhões de euros mais juros. O maior cobrança da história. Vamos agora a um exame crítico, que é esse que nos interessa mais. Nos últimos 5 minutos que temos, vamos fazer este exame crítico. O primeiro é sobre o arm's length e o direito da União Europeia. Muitas pessoas, e já vi no Brasil, a dizerem: o arm's length agora é um princípio geral, ou que de acordo com o caso da Apple, o arm's length impõe-se mesmo que esteja previsto na lei. Vamos lá ver. A Apple não recorreu da decisão do Tribunal Geral, que disse isto. E, portanto, o Tribunal de Justiça não revisou esse ponto. Isto torna a jurisprudência do Apple contraditória com a jurisprudência estável do Tribunal de Justiça da União Europeia, como em Fiat e Amazon, que sempre indicou que o arm's length só pode ser aplicado se estiver previsto na legislação ordinária. Esta divergência do caso Apple deve-se única e exclusivamente à falta de recurso da Apple. E, portanto, qual o impacto disto para o Brasil? O Brasil pode alegar, os profissionais brasileiros podem alegar o caso Apple como um precedente, que não há um arm's length global, um arm's length da OCDE. O arm's length vale na medida em que a legislação o preveja. A lex scripta e a lex stricta preveja. Portanto, nem num contexto da União Europeia, nem num contexto da OCDE, foi alguma vez considerado que o arm's length vale sem assentimento legal. Segundo ponto, que é um ponto muito interessante. A Comissão Europeia recorreu às Transfer Pricing Guidelines e principalmente ao Authorized OECD Approach 2010 para revisar os rulings de 91 e 2007. E isto a Apple considerava que era retroativo. O Tribunal disse que, isto é posterior, mas isto coincide essencialmente, o Authorized OECD Approach coincide essencialmente com a lei irlandesa, que são 2 parágrafos. Portanto, aquele documento de 50 páginas que a Comissão usou coincide essencialmente e, portanto, pode ser aplicado. Qual é o impacto para o Brasil? Cuidado, que este raciocínio também pode ser utilizado no Brasil. Mesmo que vocês não recebam normas de soft law, os tribunais brasileiros podem se inspirar no Apple para dizer: isto coincide essencialmente e, portanto, como no Apple fez, nós também vamos fazer. Isto é um grande alerta para os profissionais brasileiros, para terem cuidado não só à legislação brasileira, mas também ao soft law da OCDE, que eu vejo em muitos países que ela é referida mesmo não tendo assentimento na lei. Terceiro, a atribuição por exclusão. O Tribunal de Justiça disse: vocês podem fazer, porque simplesmente a Apple não provou quais eram as funções na casa-mãe. 2 ou 3 notas. Número 1, a importância de carregar os elementos da prova no momento certo. Neste caso, no momento administrativo. Se a Apple tivesse feito isso no momento administrativo, provavelmente a decisão teria sido diferente. Mas vamos analisar porquê é que a Apple não cooperou. Porque isto não vejo tratado nem na doutrina. E para mim, e isto é uma suposição minha, a Apple não cooperou porque se ela provasse que muitas das funções dos ativos tinham lugar nos Estados Unidos, eles podiam dar lugar à tributação na fonte dos Estados Unidos. E eles podíamos dizer que existe um engagement in a US trade or business. Portanto, a Apple estava entre a espada e a parede. Por um lado, queria ganhar o caso, mas se ganhando o caso, tinham de mostrar que havia muita substância nos Estados Unidos, e isso iria abrir um problema nos Estados Unidos, que provavelmente reputacionalmente seria bem pior. Isto mostra que temos de ter uma redobrada atenção com a documentação dos planejamentos. Temos de registar e temos de provar muito bem antes de uma inspeção. Por último, substância económica versus forma, este caso demonstra que os tribunais, isto é uma tendência geral, que os tribunais estão a encaminhar no sentido, independentemente das regras anti-abuso, de caminhar no exame da substância económica em relação à forma. Algumas conclusões. O desfecho deste caso Apple transmite uma mensagem clara. A era do planejamento tributário agressivo, visto outrora como um jogo glamouroso e de risco calculado, está a chegar ao fim. Esta decisão, houve um tempo em que desafiar os limites da lei fiscal era, pelo menos para nós portugueses e brasileiros, era um esporte, não era? Em que era uma estratégia arriscada, mas tinha recompensas milionárias, ou neste caso, bilionárias. Este tempo está a acabar e o Apple mostra isto. Estamos agora numa era de transparência total, uma era de cooperação internacional que coloca uma pressão insuportável sobre esquemas que vivem no limiar da legalidade. As novas regras, particularmente as anti-abuso e de cooperação internacional entre as receitas federais, tornam essas estruturas ingovernáveis e indefensáveis. Então qual é a lição para todos nós? A Apple ensina que neste tabuleiro do global do direito tributário, os lances excessivamente arriscados não deixaram de criar um checkmate ao fisco. E eles aplicam um próprio checkmate no jogador. Porquê? O jogo mudou, as regras mudaram e quem insistir jogar com o manual antigo um jogo novo não está a ser usado, mas está a expor a sua empresa a grandes riscos. Muito obrigado pela vossa atenção e as minhas desculpas por ter cedido em cerca de 30 segundos o meu tempo.
Imagina, João, a gente agradece muito por essa apresentação excelente para tratar num período tão curto, né, de um caso complexo e como você apontou muito bem, que traz aí algumas repercussões e pontos relevantes para a gente considerar. Now I will switch back to English, so I'll have the pleasure you to our second panelist, who will be covering a theme which I believe will attract a significant interest from our audience in view of its particular relevance within the Brazilian context. Although we did have some very good presentations about, Pillar 2, Vikran Chand will be discussing Pillar 2 and tax incentives, which, as I said, will be very relevant for us in Brazil. So Vikram is a professor of international tax law, government advisor, and specialist in transfer pricing and tax treaties. So Vikram, we are very glad to have you here today. The floor is yours.
Thank you, Flavia, for that kind introduction. It's a pity I couldn't join you all in person, so hopefully next time I will be there in person with the organizers and be a part of this fantastic conference, which a lot of people in Europe speak about this event, actually, so I'm glad to be a part of it. So the topic that I'm actually going to address today is the impact of the Pillar 2 project on tax incentives and tax incentives post Pillar 2. And actually, what I would just like to do is just to set the scene. I just wanted to just give the audience an overview of the different kinds of tax incentives that are currently offered across the world. So basically, when you talk about tax incentives, and here actually we're just going to focus on corporate tax incentives and not individual tax incentives or indirect tax incentives. So when you talk about corporate tax incentives, broadly speaking, these incentives can be divided into two big baskets. You have expenditure-based incentives and you have income-based incentives. And within expenditure-based incentives, you have your standard tax deductions. For example, immediate expensing and accelerated depreciation provisions, or tax allowances for tangible assets or short-lived intangibles. So tax allowances basically are your super R&D deductions, as an example, where the actual economic expenditure that is incurred by the taxpayer is 100, but the tax law of a particular country allows the taxpayer to deduct 150 or 200. So that's a super R&D expense, is an example of a tax allowance. And at the same time, you have tax credits. Now, tax credits is a concept which is very commonly found in the developed countries, in a lot of developed countries, but it is not so common in developing countries. So tax credits are also expenditure-based incentives, and tax credits can actually be used to reduce your tax liability, your corporate tax liability, dollar by dollar. So, for example, if you have expenditure of 100 on R&D, then the government of a particular country can give you a tax credit. Let's say 10% would be your tax credit. So your tax credit allocation would be 10. Then you can use that 10 of a tax credit to set it off against your taxes that you actually owe to the government. So within tax credits also, you can have different kinds of tax credits. You can have your non-refundable credits. You can also have refundable credits. What are refundable credits is, suppose if the taxpayer has a tax credit allocation of 150, but the taxes that the taxpayer has to pay is 100, then that excess 50 would be refunded by the government. So you have non-refundable credits, you have refundable credits, and finally you also have something known as transferable credits, where if a taxpayer has excess tax credits, he can actually sell his tax credits. He or she can sell the tax credits to another taxpayer and actually monetize on the tax credits which they initially had. So you have different variation of tax credits. So broadly speaking, expenditure-based incentives are your tax deductions and your tax credits. On the other hand, what you find a lot in developing countries are income-based incentives. Now, income-based incentives can take various forms. You can have full exemption of your profits from taxation. So if you're a company, you have profit of 100, their entire profit will be exempt from corporate income tax. Partial exemption is where you have profits of 100, but then the government basically says 50% of those profits are exempt, 50% is taxable. And then you have reduced rate of taxation, where basically your corporate tax rate is 25%, but on a certain item of income, let's say interest income or royalty income, your tax rate is around 5%. So these kind of incentives are actually found both in developed and developing countries. But in developed countries, what's more common are expenditure-based incentives, whereas income-based incentives are typically found in developing countries as well as in a lot of investment hubs. Now, the question that arises is, how does the Pillar 2 project actually hit these tax incentives? Now, without going into too many details of the ETR calculation mechanism under the Pillar 2 project, what I would just like to mention to you is that income-based incentives are deeply impacted by the Pillar 2 project, because the logic is very simple. I mean, calculating the effective tax rate, academically speaking, is a very simple concept. You have your numbers in the numerator, you have the numbers in the denominator. So if in the numerator you have 20 as your taxes, and in the denominator you have a profit of 100, so your effective tax rate is very simple, it's 20%. But what happens with income-based incentives, if I take the example of a full exemption incentive, what happens is that in the numerator, the number that goes in is zero, because the taxes you pay are zero because of the tax holiday. So you are in the numerator, you have zero. In the denominator, you still have 100. So your effective tax rate is 0%, and then you are subject to a top-up tax of 15%. So essentially, this Pillar 2 project completely kills or eliminates tax holidays which are offered by a lot of developing countries, or incentives which are there in special economic zones, so on and so forth. So on the other hand, the Pillar 2 project also impacts tax deductions. So for example, whenever you have tax allowances, What happens is when you have a tax allowance and you can deduct more for taxable income purposes. So when you deduct more for taxable income purposes, that means the taxes you pay are going to be, your taxable base shrinks. And when your taxable base shrinks, your taxes that you pay also shrinks. They are reduced. So the amounts that go sit in the numerator of the formula are also low, whereas your denominator for Pillar 2 purposes is linked to your financial accounting income. It's not linked to your taxable income. It's linked to your financial accounting income. So basically, tax allowances also lead to low effective tax rates. And then, companies who have access to such incentives, they would be subject to top-up taxes. But what the Pillar 2 project actually blesses is tax credits. But within tax credits also, you need to make a difference, like I mentioned to you, between non-refundable credits, refundable credits, and transferable credits. Now, non-refundable credits as well as refundable credits, which are refunded after 4 years, or transferable credits, which are non-marketable in nature, all these credits are considered to be bad credits, whereas some credits are still considered to be good credits. And one of the good credits is something known as a qualified refundable tax credit. So probably you would have heard of this concept already, and I think Brazil already has implemented something in this area, a QRTC. So what is a QRTC? A QRTC is basically a credit that is given, a credit which is it's a refundable credit, but that it needs to be refundable within 4 years. So if a taxpayer gets access to a tax credit which is refundable in nature, and if that refund is given within 4 years from the date when the credit has actually been allocated, then that credit would be a good credit from a Pillar 2 standpoint. And in fact, what is happening is, as a result of the Pillar 2 project, a lot of countries around the world, including Brazil, have actually implemented QRTCs, qualified refundable tax credits. So that's one kind of incentive which has kind of been protected by the Pillar 2 project. But, if you take a deep dive into the concept of a QRTC, you may ask yourself is who decided whether who took this decision that if a credit is refundable within 4 years, then it's a good credit. When it's refundable after 4 years, it's a bad credit. Who drew the borderline here? What is the logic here? Was it tax policy logic here? Obviously there's no logic, so they just had to draw a line somewhere, and a line was drawn with respect to this 4 years. But more fundamentally speaking, was a difference between a non-refundable credit and a refundable credit? Obviously, there's a refund component, but from a policy perspective, if you think about it, both refundable credits and non-refundable credits can achieve the same policy objective. So, the distinction between a good credit and a bad credit, just based on the refundable criteria, does not really make sense from a tax policy standpoint. And I'll come back to this point. So in general, if you have to summarize, post Pillar 2, I know Brazil has implemented a QRTC, but there are other incentives also which governments are actually thinking about. And one is shipping income incentives. A lot of, if you look into the Pillar 2 project, international shipping income is not subject to top-up taxes. There's a clear exclusion for the shipping sector. So basically, a lot of countries right now, they are rethinking the design of their shipping income taxation regime. And actually, many countries are thinking about extending tax incentives to the shipping sector as a result of the carve-out of shipping operations from the Pillar 2 project. In addition to that, a lot of countries are actually thinking of aligning their participation exemption regimes or domestic restructuring regimes in line with the GLOBE rules, because in the Pillar 2 rules you have some concepts of excluded income, and some of the income which is exempt from top-up taxes is actually dividend income or capital gains from, let's say, substantial shareholding. So a lot of countries are looking into aligning their participation exemption regimes with the Pillar 2 regime, Pillar 2 exemption items, so that companies in their location can get maximum benefit and not pay too much taxes, and they become more attractive as a holding company jurisdiction. Apart from that, a lot of countries are also thinking about aligning their domestic restructuring rules with the GLOBE reorganization rules that you find in the Pillar 2 project, so that there is no extra taxes that companies will have to pay when they engage in some restructuring, domestic or cross-border restructurings. QRTC is the best. QRTC seems to be the best tool that a lot of countries have actually implemented, whether it's in the developed country space or developing country space. In fact, as you said at the start, as you mentioned, I do some advisory work for governments, and actually a lot of work that we do is on designing QRTCs. Designing a QRTC is a challenge, but we are trying to design that. But apart from that, governments are also thinking about MTTCs, marketable transferable tax credits. So that's really not off the table. It's a more complex regime, marketable transferable tax credits, because there you need to set up an entire infrastructure. You need to set up an intermediary in between where these credits can be actually traded. It's a bit like the carbon trading system, but carbon credit trading system. You'll also need to set up a trading system for transferable tax credits. Apart from that, one incentive which could be very useful for asset-intensive sectors is immediate expensing and accelerated depreciation. So these incentives are immune from the Pillar 2 project because of some specific deferred tax liability and deferred tax asset related rules. So, we don't need to go into the technical details of that. But finally, a lot of countries are also thinking about subsidy programs. Subsidy programs are like QRTCs. But the issue with QRTCs and subsidies is that there is a refundability component, and typically developing countries, they don't have the cash to give back to the taxpayers. So subsidies and QRTCs, a lot of developing countries don't really think about subsidies. Vietnam did it. They implemented a subsidy program, but all the best to them for administering that. So if you don't have the cash, you cannot give the refund back to the taxpayers. You cannot give a subsidy to the taxpayer. But apart, Vietnam seems to be an outlier there, but a lot of developing countries don't want to go down the subsidy route. They still want to go down the QRTC route because some of the credits which are issued by the government, they can be used to set off the tax payable, and the balance would be refunded in nature. But where we are right now and what actually is very interesting is actually designing tax incentives in the post-Pillar 2 environment. I think that a lot has been written and said about impact of P2 on tax incentives. But the interesting challenge right now for countries is on designing post-Pillar 2 tax incentives, because when they're designing this post-Pillar 2 tax incentives, one of the things that they need to look into is this ongoing work at the level of the OECD with respect to related benefits. Now, there are some rules within the Pillar 2 project which says that if a post-Pillar 2 incentive, like a QRTC program is being developed or a subsidy program is being developed by a country, then these incentives should not be directly linked to the top-up taxes that have been collected. So the main message is the following. So if a country is collecting top-up taxes from an in-scope multinational enterprise, then that particular country shouldn't just take that cash and hand it back to the same multinational enterprise in the form of a qualified refundable tax credit or in the form of a subsidy. So it's just basically what the policymakers are trying to stop is Robin Hood scheme. The Robin Hood scheme is you take from the rich, but Robin Hood usually gave it back to the poor. But here, the government wants to give it back to the rich. I think that's what the governments want to stop. So actually, it's the reverse Robin Hood scheme. It's not the Robin Hood scheme; it's the reverse Robin Hood scheme, where you take from the rich and you give it back to the rich. That's what the OECD is also trying to put a break on. And there is some ongoing work that's happening with respect to related benefits. And even though nothing has been published, but what we expect is that some common sense hallmarks will be developed, and if the government or the taxpayers, they somehow, or if the incentives are meeting or satisfy some of these hallmarks, then they would be considered to be bad incentives, and further policing will be required, or they would just be classified as bad incentives. For example, some common sense hallmarks that will be developed is if the incentive is developed only for in-scope multinational enterprises or entities belonging to in-scope multinational enterprises, then that would be a red flag. Then if the incentive is given, or if the calculation of the incentive is only linked to profits, that would be a red flag. Then if the incentive is a discretionary based incentive, where the incentive is given to the taxpayer, and there's a lot of discretion that has been exercised by the tax administration in granting that incentive, that would be a red flag. Lack of transparency about this incentive in the public domain, that would be a red flag. So there would be many red flags that would be developed. And if some of these red flags are met or satisfied, then basically, that incentive would be labeled as a bad incentive. And if it's labeled as a bad incentive, then you will get bad treatment from a Pillar 2 standpoint, and then eventually the incentive would actually lead to more top-up taxes. But even more interesting right now is this G7 agreement. Now, probably a lot of you would have spoken about this G7 agreement, the side-by-side system, which the US government has pushed and to which the G7 has agreed. And one of the components of the side-by-side system, which is component number 4, the last bullet point on the slide, it basically talks about considering changes to the Pillar 2 treatment of tax credits. Like I had mentioned to you before, the Pillar 2 project blesses tax credits which are refundable in nature and which get this qualified status. So qualified refundable tax credits are considered to be good credits. But I guess the US government has a problem with that right now. And whenever the US government has a problem with something, compromises are usually struck in the international tax system. And the side-by-side system is a very good example of that, right? Of a compromise system. So just to give you an example here, what's the issue from a US government standpoint? So if you take a Swiss company, I live in Switzerland. So if I take a Swiss company like Nestle, if Nestle has a subsidiary in the US, and this subsidiary has refundable tax credits in the US. Now, these credits are typically bad credits because they're non-refundable in nature, because in the US, the government doesn't give refundable credits in general, but there are some exceptions. But in general, all the tax credits, they're non-refundable in nature. And this non-refundable credits can actually reduce the ETR of US subsidiaries quite a bit. They can even go down to 5%, 3%, or even 0%. But what the US is saying that in this case, they would like to ensure that their non-refundable credits are also considered to be good credits from a Pillar 2 standpoint. They don't want other countries to pick up top-up taxes linked to their tax incentives. So essentially, the main argument of the US is that, firstly, who made this distinction between good credits and bad credits from a Pillar 2 standpoint? I mean, there's no proper policy discussion around that. So the concept that has been put forward right now is something known as substance-based non-refundable tax credits. So as long as there is a tax incentive or a tax credit system, and that tax credit system is has been designed to attract a lot of substance-based activities. Whether or not it's refundable or non-refundable should not be the driver for it to be considered a good credit. But the driver for it to be considered to be a good credit or not is whether or not it leads to substantial activities in a location. If it leads to substantial activities in a location, then irrespective of the form, whether it's refundable, non-refundable, it should still be classified as a good credit from a Pillar 2 standpoint. So this is where the US government is pushing for point number 4, based on my information from different academics, different policymakers. But this is not something new that I'm saying. So basically, there's going to be now additional work at the OECD, and probably we will move away from the concept of QRTC, where we will land to the concept of something known as QTC. What is a QTC? It's just a qualified tax credit. That refundable word will just go in the dustbin. So it will just be a qualified tax credit, a QTC. What is a QTC? A QTC is a credit which basically promotes a lot of substantial activities in a location, as simple as that. So if you have a QTC, then that QTC will be considered to be a good credit from a Pillar 2 standpoint. With that, I think I will stop and end my presentation. So in the future is probably QTCs. We have to move away from QRTCs or substance-based QTCs. Thank you.
So, thank you so much, Vikram. This is indeed very interesting, and I'm sure we'll still have a lot of discussions involving tax incentives and the impacts on Pillar 2, and especially considering all, the international context and what we are facing right now. And exactly to provide us with a better perspective of that context, I have the pleasure to introduce Isabelle Richelle. Isabelle holds a PhD from the University of Brussels, and she's a professor at HEC Business School of the University of Liège. Additionally, Isabelle is the co-chair of the Tax Institute of the University of Liège and a member of several organizations, including the Global Women of IFA Network. Isabelle will be talking about Pillar 2, but she will be addressing a question that I'm sure many of us have, especially after the approach that Vikram mentioned, adopted by Trump administration on the matter, which is what is the future of Pillar 2 in the European Union. So Isabelle, welcome, and thank you for accepting the invitation to be here with us today, and it's great to have you on board.
Thank you so much, Flavia. I hope you can hear me now. Thank you so much, and ladies and gentlemen, it's a pleasure for me to be here with you today. I would have also preferred to be in Brazil in person and to discover this beautiful country another time, maybe. It's an honor for me to have been invited to participate in your annual conference, and thank you for this opportunity. And yes, I've been asked to talk to you about the future of Pillar 2 in the European Union. And more globally, Vikram, it was very interesting to listen to you on Pillar 2 and tax incentives. But my question now would be, will Pillar 2 survive to the recent policy aspects? So first of all, I think it's useful to remind some important points that are relevant for my presentation. And then I will focus on two political aspects, considering recent information, position of the US presidency, amongst others. And on the other hand, I shall detail a recent decision by the Belgian Constitutional Court, which has referred a preliminary ruling to the Court of Justice of the European Union. You know that the interpretation given by the Court of Justice has a erga omnes effect, as such allowing for uniform and binding interpretation within all member states. So the decision of the European Court is, of course, very important. As you know, Pillar 2 is part of the BEPS plan, and it was decided in October 21, where nearly 140 countries, members of the OECD and of the G20 inclusive framework, agree on international tax reform based on two pillars. And Pillar 2 aims to impose a global minimum level of taxation so that MNEs are required to pay a minimum effective tax rate of 15% of their profits. It is said from a political point of view that Pillar 2 was pushed mainly from the European point of view by Germany and France. This agreement in 21 resulted in a technical text, the Globe Rules, published in December 21. And of course, the European Union participated in the discussion at the OECD level. And as a good pupil, it implemented the Globe Rules in a directive which was published in December 2022. What is particular here is that the directive also extends the scope of Pillar 2 to include large domestic EU groups. I think it's also interesting to recall the decision-making process put in place for Pillar 2, considering the OECD and EU levels. You know that the OECD is essentially an intergovernmental organization that takes position by consensus. The OECD text or recommendation are not binding. The EU, as I said already, participates in the works of the OECD. At the EU level, in tax matters, the decisional procedure is a bit specific. The Commission prepares directives, which are formally adopted by the Council, which is composed of ministers of member states, and decisions are taken on a unanimity rule. The EU Parliament has no real power in this process. In this case of the Pillar 2 directive, unanimity was very easily and very quickly reached, as the directive aims to combat international fraud and evasion, and why country would want to veto it. And both the OECD and the European Union promised countries, member states, significant new tax revenues. So now the directive is in force, and the member state had to implement it. Pillar 2, as implemented by the EU directive, provides for a top-up tax to be levied when the effective tax rate of a group of MNEs or a large domestic group in a given jurisdiction is less than 15%. That jurisdiction is then considered to be a low tax jurisdiction. And the top-up tax is determined by two interdependent rules, namely the IRR and the UTPR. The IRR implies that a parent entity of an M&E group or a large domestic group calculates and pays its attributable share of the additional tax for the low tax constituent entities of the group. And what is more important for us and me now is that when the parent entity is an excluded entity or is located in a jurisdiction that does not have a qualifying IRR, the UTPR applies. And this latter implies that a constituent entity of an M&E group has to pay in its country an additional tax burden. And this is important for the Belgian case. So after those few introductory words, policy aspects. We can understand the basic objectives of the Pillar 2 project, but one may wonder whether the means employed to achieve them are appropriate. Pillar 2 is considered by some legal scholars as well as some practitioners, including members of tax administrations, to be extremely complex to understand and to implement. Pillar 2 generates significant cost, heavy administrative burdens, also for both the MNEs and tax authorities. And for the European countries, it seems that the expected revenues have been overestimated. If I consider the situation of Belgium as an example, I see that the OECD estimate was 1 billion, while the Belgian government, during the discussion of the transposition bill, cited a figure of 300 millions, and probably the real revenue will be lower than that. This can be explained, of course, by the fact that low tax countries have, some of them, but have adapted to capture their share of revenue, which is ultimately in line with the spirit of the project Pillar 2. Another important criticism is the negative impact of Pillar 2 on a potential negative impact of Pillar 2 on European and EU member states' competitiveness, particularly if major countries do not participate. And this includes, of course, the United States, also China, India, Russia, In this context, the question of retaliatory measures also rises, as we will see with the US. However, Pillar 2 has positive impacts, notably the reduction of tax competition between states by establishing a minimum level playing field at international level. And for some countries, of course, Pillar 2 will be a new source of revenue. In June, first of all, Pillar 2 was discussed at the level of the OECD, and the United States, as a member of the OECD, participated in the work on Pillar 2. However, in June, the US president declared Pillar 2 unenforceable in the US, arguing that it infringes on its fiscal sovereignty, very important, limits its economic competitiveness, and that the US guilty rules should be considered as equivalent as sufficient for the application of Pillar 2. And the US also prepared a national retaliatory provision mechanism in order to negotiate with the OECD and other states. And this is in this context that at the end of June, as Vikran already mentioned, the G7 agreed on a compromise to allow US companies to be exempt from the global minimum tax as long as they remain subject to a domestic US tax regime. In practice, this means that IIR and UTPR would not apply to US MNEs. And as a consequence, if this compromise applies, the US will repeal the retaliatory internal tax measures. At this stage, the OECD can consider itself as satisfied with having reached a compromise that allows Pillar 2 to remain in place. And the OECD can also be satisfied because the idea of a minimum level of taxation is maintained. But the story is not over yet. In early July, the European press reported comments by the German Chancellor, who believes that Pillar 2 is no longer viable and that it negatively affects European competitiveness. And more recently, it seems that some comments have at the OECD level during the discussion around this compromise, some members of the OECD have expressed dissatisfaction with this compromise, which they consider to be unbalanced and to have a negative effect on the economies of the states that will apply Pillar 2, amongst which, of course, the EU. And most of those comments should come from EU states participating in the OECD. Pillar 2 was subject to of consensus during the negotiation at the OECD. It has to be implemented, and this implementation relies on the good faith of the states. Why to participate in the consensus if it is only to withdraw later? The EU has played along and very quickly did the necessary to ensure that Pillar 2 was applied. And if the EU would be the only one to apply Pillar 2, of course, it may indeed be shooting itself in the foot and jeopardize its economic competitiveness. Neither the US, I already mentioned, nor China, India, or Russia have taken action so far, but some other big countries like Canada, Japan, Australia, the UK have incorporated the main elements of Pillar 2, and some other countries have already introduced at least a local top-up tax or adjusted their tax rates to avoid falling within the scope of Pillar 2. And this is the case, for example, of Brazil or South Africa, and some other countries are working on that for the moment. So there would therefore be a movement among a number of states to adopt at least a minimum tax rate of 15% applicable in all cases to MNEs covered by Pillar 2. But let's come back to this position of the German Chancellor. First of all, it has been clarified by the German Minister of Finance, who stated that Germany continues to support the principle of Pillar 2. The German Chancellor suggested that Pillar 2 could be suspended. Pillar 2 suspended is mean from the EU point of view that the EU directive could be suspended. But for this directives to be suspended, it would be necessary to have a decision by the EU Council taken at the unanimity. And recent reactions suggest that there will be no unanimity on this point. This means that some member states continue to support Pillar 2 for ideological reasons, for some of them, for example, I think Spain, or perhaps simply because the efforts made up to now have been such that it would be premature to abandon the project now. It is also suggested that some adjustment could be made to Pillar 2, maybe regarding the UTPR rule, but there is nothing more that a word said here and where. So the EU considers that the project of Pillar 2 must be pursued, and this is also the view at the moment of the EU Parliament. There is a FIS committee at the EU Parliament specialized in taxation, and the FIS committee had a discussion during this summer on the US position, and they were part to discussion with US authorities to see what's happening. From the Commission side, one may consider also that it's not a matter of discussion. Pillar 2 should continue from now, and we can see that the EU Commission early in July adopted the DAC 9 directive, which established technical rules for automatic exchange of top-up tax information returns between member states. Nevertheless, Pillar 2 raises question of principles, particularly with regards to its extraterritorial aspects. So we can be afraid of the US position, but from a legal point of view, maybe there are some points. This extraterritoriality is also being challenged by the Americans, USA, in their annulment proceedings before the Belgian Constitutional Court. Who is involved in this case? US association representing US companies, which are essentially seeking the annulment of the UTPR rule as transposed in the Belgian law. What are the critics? Violation of the principles of equality and non-discrimination, violation of principle of legality of taxation, freedom of enterprise, principle of legal certainty, and principle of fiscal territoriality as enshrined in Belgian legislation, European Charter of Fundamental Rights, and the European Convention on Human Rights. The first arguments, globally, there is an obligation to pay an additional tax due to insufficiently taxed profits outside Belgium. This obligation to pay additional tax is unrelated to the profits of the Belgian entity, which is required to pay it. And according to the plaintiff, this would result in a disproportionate burden that infringes on the right to property and freedom of enterprise. And this additional tax is a financial charge for the Belgian entity that could affect its financial situation. And the criticism is completed by the argument that there is no rule to prevent a deterioration in this financial situation. So the failure to take the financial situation into account would lead to a discrimination between Belgian entities that have the capacity to pay this UTPR and those that do not have this capacity. The second argument is that the UTPR mechanism does not make it possible to predetermine in which jurisdiction the additional tax must be paid and which constituent entity has to pay it. So there is an uncertainty both for the constituent entities and also, and this is the main argument, for third parties, in particular creditors. And this would also be a problem. And the third argument is the tax territoriality. The UTPR, it's suggested that the UTPR has no connection with the activities of the Belgian constituent entity subject to it. And the link is made here with the case law of the European Court of Justice relating to territoriality, and the court points the link between the location of taxable matters and the power to tax. Finally, it must be noted that if there would be discrimination somewhere, violation of cited principles, there might be also the possibility for the court, the European Court, or at a later stage, the Constitutional Court, which will have to decide on the constitutional aspects, there still would be a possibility to justify a discrimination, and we know that also the discrimination has to be proportionate. So justification and proportionality are also to be taken into consideration. And all this must be considered in light of the objectives pursued by the legislator. So the bets are open now. We will have to wait for the decision of the Court of Justice in a few months. Thank you for your attention.
Thank you so much, Isabelle. And well, considering all this turbulence around the OECD initiatives and the always present critics about its lack of effective inclusiveness, it will be very interesting to hear our fourth speaker, Liselott Kana, who will be talking about the developments in the United Nations Framework Convention on International Tax Cooperation. Liselott Kana is the co-chair of the UN Committee of Tax Experts. So Liselott, it's an honor to have you here. Thank you very much for joining us today.
So sorry, I'm getting a bit ahead of my presentation here. the dots are not working as I thought. Thank you very much for the invitation, Flavia. It's really happy to be here. And there's so much going on at the UN, and I think it's very appropriate that at least we get some sort of information or what is going on and in the different areas, because there are, as you mentioned, the UN Tax Committee that worked under the ECOSOC, and we have what is, I'm going to talk more about today, the UN Framework Convention, which is actually sort of work being done under the General Assembly. And just exactly that topic, why now? Because for those of us who've been involved in international tax work, we have seen for years how different countries have tried to make the UN work on taxation and sort of get involved more in international cooperation in that area. So why now? Well, I think there are various aspects to that, and that's quite interesting. First of all, I think many developing countries, particularly from the African region, were not happy with, and it's also very good that I'm speaking after Isabelle, because, Isabelle was talking about consensus-based decisions and, decisions that are taken in unanimity. What is the difference? And I think many of the participants in the inclusive framework, which is, 140 jurisdictions, felt that this was not a consensus-based organization. Decisions were not taken on a consensus base, which is basically what the OECD should have done. So there was uncomfortable countries that were saying like, we are here because, we want to comply with the standard, but we really can't set the agenda, and, our views are actually not taken into account. And basically, I would say that they changed the sort of structural attack, so to speak, from the developing countries at the UN, from the ECOSOC, where it had been with, as you said, Flavia, the Committee of Tax Experts had always been within the umbrella of the ECOSOC area, and they changed it to the General Assembly. And that's extremely important, because at the General Assembly, the rules of decision making is majority plus one. So it's not consensus-based. I mean, it strives to be consensus-based, but if there is decisions to be made, then it's by majority. And who has the majority at the UN? Well, that's very simple. Yeah, the African group, who is now talking in one voice, which is also very important. Most of them, they open their statements with, "I'm speaking on behalf of." Ghana or Nigeria and the African group. And that's 57 votes. So, when they talk, you listen more to them. Well, you have to, because that's 57 votes from, the EU, which is 27 votes. So, the balance of power within the UN is completely different from in other organizations, and you can feel it. So that's the UN process now, and why, in my opinion. So what happened? Well, there was a resolution in December 2023, and the General Assembly decided to start with an open-ended intergovernmental committee. So this is all done with, the private sector present and taking part. There's no, well, we had some closed meetings, but most of the meetings, I would say 98% of the meetings are open, informal meetings where the process is discussed in online, so you can listen to it, but also be present. You register and take part in the discussions, and you are actually given the floor, even if you're not a member of the UN. So they opened this discussion to make a sort of terms of reference, and so for 1 year, this committee worked and produced terms of reference for negotiation. And I also put here on the subsidiary bodies. So the subsidiary bodies of the UN also applies the rules of the General Assembly, which is basically the majority voting, which is extremely important, as I mentioned before. So the ad hoc committee was mandated to draft the terms of reference, and we got that in December 2024, it's almost a year now. The General Assembly adopted these terms of reference and launched a process for negotiation. So what are the objectives? Well, so, just to make everything understandable now, what the UN is doing is creating a framework convention to deal with taxation and cooperation international on tax issues. So it's basically opening up a new framework convention, a new directorate within the UN that will work with taxation, and that will be, of course, in parallel to other organizations like the OECD. However, and you have to, this is the great attraction to this everyone is a member and have a right to vote in the UN process. So the objectives behind this is quite clear. It's to foster inclusive, effective international cooperation, establish a government systems, and to promote something which is a fair allocation of taxing rights, whatever that is. And that's what we're trying today to try and put into context a little bit more. In order to have something that makes us all having a substantial development. So here we are, the commitments. So, there are two things, the objectives and the commitments. What do you sign up to? So the discussion so far, remember now that we have established in December 2024, the committee. also the General Assembly asked us to create this committee. And since then, of course, we have started to work on that. Objectives and commitments. Commitments should be at high level within the framework convention. Fair allocation of taxing rights, combating tax evasion, tax avoidance, support sustainable development, effective mutual administrative assistance, and tackle illicit financial flows. Those are the commitments that we have in the terms of reference and the ones that would probably be included in the inclusive framework convention. So the terms of reference, the structure that we are in now, they created a member state-led intergovernmental negotiating committee. We call ourselves the INC. We are tasked with drafting the convention and 2 early protocols over a 3-year period, 2025 to December 2027. And so we have started this work already, and I'll come back to a little bit of where we are now. But I think it's one of the things that is important to try and understand in this process is that the commitments will be in the framework convention, the sort of parasol convention, and from it will drop protocols on different issues that countries can sign up to differently. So you can be a member of the framework convention and not sign up to the protocols, or I'm not too sure we have decided yet, but perhaps potentially one could be a member of a protocol, although not the framework convention. I doubt that, but it's not decided yet. Now, the 2 protocols which has already been decided, I think is extremely important. The Protocol 1 is addressing the taxation of income from cross-border services, and in an increasingly digitalized and globalized economy. So extremely wide scope of a protocol, including, of course, digital services, etc. Protocol 2 is the prevention and resolution of tax disputes. So these are sort of 2 protocols that are going to be negotiated in parallel to the framework convention. And in this context, I'll tell you a little bit how it's done. We have a bureau. Under the bureau, there are co-leads, one from a developing country and one from a developing country for each of these work streams. So there are 3 work streams, the framework convention, the protocols 1 and 2. So work stream 1, 2, and 3. Work stream 1 has a co-lead only from a developing country, so it's not co-leads, it's a co-lead without its counterpart from developed countries who have not put forward any name. And that's Mr. Daniel from Ghana. He is leading that work on the Framework Convention. On Protocol 2, there's also only one co-lead, and that's myself. I don't have anyone helping me in this from the developing world. However, in Workstream 3, we have the prevention and resolution of tax disputes. That actually has a co-lead from a developed country, Michael from Germany, and also a co-lead from developing countries, that is Jamaica and Marlene. So what were we discussing now? Well, the way we are working is we have a bureau. The bureau is a chair, Mr. Rami from Egypt. We have 18 vice chairs and a rapporteur. And these are assigned on geographical representation. This is the UN, and that's how the UN works. The area we come from, Latin America, the GRULAC area, includes the Caribbean. So we have 3 members in that bureau. Brazil, we have Claudia Pimentel from Brazil, Chile, myself, and we have Colombia and Jamaica, Marlene, and Colombia, I think it's Andrea. So these 4 countries, I would say, from our region are the ones who have sort of put more efforts into the process. We have in our region a little bit of different we all know ourselves a little bit more perhaps than the outside world, but we have quite different policy decisions in our area. So we are not acting like the African group, which just speaks like, one voice with 57 votes. We do have a sort of core where we try and keep aligned, and I would say that those 4 countries are doing that with the participation, of course, of others in the region, and that has actually been very, very helpful. So decision-making rules, I've talked on that already. It's important to say that the general rules of majority plus 1 is the rules of the General Assembly. However, in the terms of reference, in relating to the protocols, which are the substantial issues to be discussed, there was this decision that we would have a 2/3 majority to take decisions. So in April 2025, we had a roadmap, and to just sort of how it will finish, we'll have the final convention text and 2 protocols to present to the General Assembly, and this is the obligation, for consideration in the first quarter of its 82nd session in 2027. Again, these are all new ways, one has, as a tax person, I'm a tax person, and we work very much with the diplomatic people because, the UN has rules that we are actually not familiar with. So when you say it's going to be presented the first quarter of its 82nd session, that means that the General Assembly opens in September and finishes in December. So we have the 3 months or 4 months period to present during that period. Yeah, so it's not a fixed date. So Protocol 1, just to quickly tell you where we are. From May to July 2025, we had intensive online meetings every week, or several meetings a week. We prepared an issues note for public comments. And the issues note, what we wanted with it was to raise all the issues and complications to get what is services today, cross-border services, and what does it mean today. We had a meeting recently in August 2025 now, recently 2 weeks meeting in New York, and we discussed the issues note. If all the issues were in that note, and I think we came to a very good conclusion that the issues actually are all there. And we will now start to have the drafting of the first 00 draft, as it's called. It will be presented in February 2026. And I'm sort of talking about Protocol 1 now because it's closest to my heart. So thank you very much for that. I hope I gave you a little bit of insight, Flavia, and what's going on. I'm very happy to hear that you are taking up these issues because they are quite, for those of us who are not sort of, or those of you perhaps who are not that involved in these discussions, it's a very important discussion, and I'm happy if you can take part in it. That will be very useful. Thank you very much for today.
Thank you very much, Liselott. This is indeed very interesting, and to have this better perception of everything that is going on within the UN. And we are now moving forward to our 5th presentation, where our dearest Andrea Riccardi will be covering another very interesting and important topic relating to the global forum standards on transparency and exchange of information and their current status in Latin America. Andrea holds a PhD from University of Valencia. She's a tax advisor at the Uruguayan Tax Administration, president of the Uruguayan Fiscal Study Institute, and vice president of IFA Latam. So Andrea, it's a pleasure to have you here.
Thank you, Flavia. Very briefly, I would like to thank the Brazilian Association and its authorities for the invitation. It is a great honor to participate in this panel with very esteemed colleagues. Congratulations for organizing this amazing Congress in the beautiful city of Rio every year. And thank you, Flavia, for your assistance and the excellent coordination work done. To start with, let me say that this short presentation is based on the general report I elaborated for this year IFA Latam Congress that address exchange of information, the implementation of international standards, and the declaration of Punta del Este. And it intends to contribute to the evaluation from a regional perspective of the process of implementing the standards. And the report analyzes the objectives, progresses, and results, as well as future challenges and opportunities. And it departs from the progress reports that are annually elaborated by the Global Forum Secretariat based on information provided by governments and tax administrations, and also adds a comparative analysis that consolidates the information provided by experts from both the public and private sectors, coming from a representative group of 13 jurisdictions. And these jurisdictions are Argentina, Bolivia, Brazil, Chile, Colombia, Ecuador, Guatemala, Mexico, Panama, Paraguay, Peru, Uruguay, and Venezuela. And to contextualize and to try to understand the implementation process in the region, the report first looks at memberships and the corresponding commitments to adopt standards made by the jurisdictions, among which we find those related to transparency and exchange of information. And as you can see on the slide, there is a significant participation in these multilateral initiatives, including the Global Forum and the Punta del Este Declaration. The report also looks at the reasons that motivate these jurisdictions to join these initiatives, and it groups them in two categories. On one hand, and in yellow on the slides, those, let's say, principal reasons, since they are argued by the Global Forum, and that relate to the fight against tax evasion and avoidance, tax revenue, transparency and equity, and a stronger tax system. On the other hand, we have these collateral reasons that relate to avoiding being qualified as a tax haven or as a non-cooperative jurisdiction, with the corresponding negative impact on investor confidence. It is this last group of reasons that may have been, in certain cases, the main trigger to join these initiatives in the region. And this is important because in a context of peer pressure, the assessment of implementation costs and the consideration of regional and national preference and particularities is then carried out afterwards joining. And in this regard, in 2018, 9 years after the relaunch of the Global Forum, the Punta del Este Declaration seems to arise to somehow assert such an analysis. And at this point, it is worth also noting that the Punta del Este Declaration has indeed played a fundamental role as an instance for considering the specific challenges and needs of jurisdictions in the region. And the current process of strengthening international fiscal cooperation initiated at the UN and addressed by Liselott can also contribute to this process of customization and regional integration. Actually, in the terms of reference mentioned by Liselott of this framework convention being drafted, the exchange of information and the illicit financial flows are considered as possible topics regarding protocols. So these are the two international standards of transparency and exchange of information promoted by the Global Forum. On the one hand, the exchange of information on request standard, which entails ensuring the availability, access, and exchange of accounting and banking information. And starting from 2016, that regarding the beneficial owner. And then the automatic exchange of information standard that comprises the exchange on financial accounts, the so-called Common Reporting Standard, or CRS, recently modified, and the CARF, or Crypto Asset Reporting Framework, recently added. And the implementation of these standards requires a certain infrastructure for exchanging information. And in general, it can be said that Latin American jurisdictions have worked hard to build this infrastructure, establishing functional units, providing them with resources and procedures, and substantially expanding their network of exchange of information partners based on the Convention on Mutual Administrative Assistance in Tax Matters, which is currently in force for 11 of the 13 jurisdictions analyzed. And this convention has proved to be a fundamental instrument for the region as the regional network in force of agreements to avoid double taxation with exchange of information clauses and tax information exchange agreements is overall quite limited and does not necessarily comply with international standards. And but notwithstanding these efforts, the functional units in the analyzed jurisdictions evidence several challenges, particularly regarding ongoing training, frequent staff rotation or lack of staff, weak technological infrastructure, difficulties in managing and processing data due to large amounts of information received. But the regional progress in terms of the effective implementation of the international exchange of information standards is generally good, although diverse, as countries are at different levels of maturity. And these varying degrees of maturity is partially explained by the different seniority of the memberships to the Global Forum. However, the seniority does not always mean a greater degree of compliance. For example, we have the case of Guatemala, which joined the forum in 2018, but is still a non-compliant jurisdiction. And notwithstanding these different levels of maturity, it is possible to make some general observations. And in this regard, it is worth noting that in the region, a higher level of maturity is identified for the exchange of information on request standard compared to the automatic exchange of information standard. And this is undoubtedly influenced by the fact that the exchange of information on request standard was the first of the two standards being promoted. And along this same line, it is important to highlight that within the exchange of information on request standard, the greatest challenges in the region arise specifically from the requirement incorporated in 2016 regarding the information on beneficial owners. And overall, the region is currently focused on building and strengthening its legal framework on beneficial ownership information. And in terms of exchange of information on request, while the region can be said to be a net sender of information requests, and there has been an increase in the number of requests sent, the use of the tool remains uneven, although today it is less concentrated, apparently. The Punta del Este Declaration has marked a turning point in this regard, and according to the progress report elaborated by the Secretariat, it is known that in 2024, only 4 countries, Argentina, Colombia, Mexico, and Peru, accounted for 90% of the requests. However, it is also said that the rest of the jurisdictions have experienced significant increases in the information requests being sent. And when considered individually, not all jurisdictions report this net balance of requests being sent. And in this sense, Uruguay stands out as a jurisdiction that in the last 10 years has received approximately 22 requests for every request being sent. Notwithstanding the implementation cost of the exchange of information infrastructure, each information request received represents a cost in terms of hours of officials and potentially other costs, for example, experts, interpreters, translators. And while the Mutual Administrative Assistance Convention and some treaties provide rules for distributing the cost of each exchange, distinguishing between ordinary and extraordinary costs, this is an aspect that can generate certain inequities and may deserve further analysis and review. The request for information made in the region largely originates from data received via the CRS, the automatic exchange of information on financial accounts. So in this sense, it can be said that both standards, exchange of information on request and automatic exchange of information, are complementary. The region, however, must advance in the effective implementation of the automatic exchange of information standard and grant an efficient use of the information. And for this, it's essential to ensure both the reliability and integrity of the information, as well as to continue developing capacities to process the large and growing volume of data received, ensuring at the same time the confidentiality and security in its handling. Additionally, it is possible to identify a global trend towards an expansion of the automatic exchange of information, a mode of exchange that becomes necessary in a context of increasing globalization and digitalization. This is a global trend, let's say. The Global Forum has recently incorporated into its standard the CARF, already mentioned, developed by the OECD and the G20. Brazil, Colombia, and Mexico have committed to their first exchanges in 2027 and Costa Rica in 2028. And also currently the OECD is working on the development of a new instance regarding income derived from real estate. Another recent, relatively recent instance of automatic exchange of information established by the Inclusive Framework refers to information regarding income derived from digital platforms. And in a region of great economic informality, the transposition of the so-called model rules for reporting by platform operators is a path that the region could consider in the short term. And for the moment, 3 jurisdictions in Latin America, Argentina, Colombia, and Costa Rica, have signed the corresponding multilateral competent authorities agreement. Likewise, the development of substantive multilateral rules, such as the so-called global minimum tax that the Inclusive Framework aims to establish, as we have already seen in this panel, and eventually Amount A of Pillar 1, also require instances of exchange that contribute to this trend of greater automatic exchange of information. A particularity of the Latin American initiative, is its special focus on combating tax evasion, corruption, and other financial crimes, all of which are forms of illicit financial flows. And this is why the initiative has developed a pilot project to facilitate the broader use of information previously obtained through the exchange of information for tax purposes. The pilot project has already been joined by 7 of the 15 members of the Punta del Este Declaration: Argentina, Brazil, Colombia, Costa Rica, Paraguay, Peru, Dominican Republic. It is therefore possible to foresee a greater use of information exchange for tax purposes for other ends in the region. And also we have already seen in Liselott's presentation that also tackling the illicit financial flows is one of the commitments in the context of the Framework Convention being drafted. Likewise, within the framework of the initiative of Latin America, it seems desirable to explore other forms of cooperation, such as joint inspections abroad and simultaneous inspections, which are still underdeveloped in the region. And last but not least, a balance must be achieved between international cooperation, the powers of tax authorities, and the taxpayer rights and safeguards, especially in this context where the automatic exchange of information is becoming increasingly relevant, and the level of protection in the different jurisdictions in the Latin American region present difference, and it may be desirable to introduce some uniformity. So that's all. Thank you very much.
Thank you, Andrea. And now we are going to move forward to our last presentation. Jonathan Barros Vita will address a very challenging and fast-moving topic, and which became especially relevant for Brazilian exporters due to this new world of US aggravated trade measures. So Jonathan will be talking about trade war, tariff increases, and customs law. And I will now switch to Portuguese to introduce him. O Jonathan vai estar apresentando em português. O Jonathan é especialista em Direito Tributário pelo IBET, mestre e doutor pela PUC de São Paulo, também é mestre pela Universidade Comercial Luigi Bocconi, atua como coordenador e professor titular da Unimar e é diretor da ABDF. Jonathan, muito feliz em ter você aqui hoje nesse painel para abordar esse tema tão desafiador aqui para o Brasil. Infelizmente, estamos chegando aqui nos nossos minutos finais da apresentação e eu peço desculpa de antemão, até porque, como a gente fala, que a gente vai fechar com chave de ouro com esse tema. Então, muito obrigada aí.
Bem, obrigado, Flávia. Eu queria dizer que é um prazer retornar ao evento da ABDF, né? enfim, em um painel internacional, quando a gente estava discutindo o convite, né, o André, do comitê organizador, o Felipe Renault, me ligaram e disseram, Jonathan, você quer falar em uma mesa presencial, mas sobre um tema menos internacional, ou você quer falar de fato em um painel internacional? Eu disse, não, eu quero falar no painel internacional porque é minha área, eu fico muito feliz em rever os amigos, né? O João é um grande amigo, vamos estar juntos em Lisboa, a Andrea, o Vikran, enfim, e todos esses que fazem esse painel. E esse tema é um tema bastante interessante, né? Porque a gente tem uma mudança das cadeias globais de suprimento. A gente sente isso com a pandemia da Covid. E, curiosamente, o Trump vem como novo presidente da República e de novo como presidente da República lá nos Estados Unidos e diz, olha, eu quero produzir tudo nos Estados Unidos, eu quero, de fato, ter uma economia que não seja dependente de outros países com os quais os Estados Unidos não têm uma boa relação, o que é, assim, pelo menos do ponto de vista teórico, uma justificativa razoável para implementar alguma ideia de onshoring. Então, os Estados Unidos têm um sistema tributário, enfim, já foi objeto, inclusive, de diversas das apresentações aqui, com algumas especificidades e suscetibilidades em relação a aderir ou não a padrões internacionais, mas o que de fato ocorre existe uma decisão política de fazer um onshoring de produção. E dentro dessa política, uma maneira de modelar o comércio internacional é exatamente criando tarifas, né? O Brasil, diga-se de passagem, é um dos países mais protecionistas do globo, né, em termos de impostos de importação, impostos de exportação, os impostos de equalização, né, que equalizam a carga tributária brasileira, a carga tributária, os produtos estrangeiros à carga tributária brasileira, e a gente tem uma tributação extremamente elevada na tributação do consumo. Então, isso, obviamente, mexe um pouco com as expectativas, digamos assim, dos agentes econômicos, né? A gente sabe que o tributo, dentro dessa perspectiva econômica, ele cria distorções alocativas nos fatores ótimos de produção. E dentro desse contexto, a gente precisa entender que, dentro de uma cadeia global de suprimentos, dentro de uma cadeia de valor que tem essa característica pendular, ou seja, com uma nova revolução industrial, os bens intangíveis e os bens tangíveis, eles vão mudando de lugar a depender da organização da tributação. Os países começam, como eu disse, a pensar qual é a vocação econômica daquele Estado, quais são os elementos estratégicos para que aquela economia ela funcione. Porque, vejam, e reiterando, com a pandemia da Covid, o que se viu foi, olha, existe uma dependência enorme da China para qualquer tipo de produto manufaturado, e essa dependência causa problemas. Quando há um problema localizado em um único país, você tem uma ruptura da cadeia global. Como resolver isso? Uma parte dos teóricos, digamos assim, indica que deve haver um sistema de onshoring. Uma outra parte diz, não, a gente precisa criar múltiplos elos nessa cadeia produtiva que possam se substituir de maneira recíproca. Isso já acontece em menor medida com a cadeia global de alimentos, né? Então você tem ali produtores relevantes em vários mercados diferentes, mas dentro do processo de manufatura e com obviamente, um revisionismo histórico da Revolução Industrial, do boom americano, que é base dessa política dos baby boomers do Trump, ele se vê em uma situação em que ele acha que deve induzir, digamos assim, esses comportamentos. Tem um artigo, inclusive, do Cristiano Carvalho, né, que é um brasileiro, estudioso aí do Land Economics, e ele fala, olha, tudo é uma questão de teoria dos jogos, né? Existe a doutrina do louco, que é que é conhecida como doutrina do louco, tá? Não é porque eu tô usando aqui a expressão de maneira correta, que era o Nixon cria essa doutrina e o Trump reaplica ela em um cenário de um bullying internacional, para que todos sigam, digamos assim, as orientações dos Estados Unidos e que a economia mundial continue gravitando dentro dos Estados Unidos. De outro lado, você tem ali o que se chama de chicken game, né? Que é o jogo da galinha. Então, todo mundo aqui já viu vários filmes, mas tem um filme clássico, é Footloose, né? O que denuncia talvez minha idade, em que eles vão com os carros e vai um carro contra o outro e chega no final para ver quem é que é o último que vai desviar. E talvez o Brasil e quase todos os países estão nesse lugar, né? Então, o Trump, no começo do ano, faz um movimento contra Canadá, contra México. Depois, no dia 2 de abril, vem o chamado Liberation Day, né, em que ele aplica tarifas baseadas em um flat de 10%, independentemente dos Estados Unidos ter superávit ou déficit comercial, ele tem uma aplicação mínima de 10%, e ele usa a balança comercial como critério para dizer, olha, você tem eu tenho um déficit da barreira comercial de 50%, então eu vou dar uma redução de 25%, vou adicionar mais 10%, então a alíquota vira 35%, né? Dizendo que isso, na realidade, quando há um déficit comercial, isso é uma exploração comercial dos Estados Unidos. E, talvez como elemento que culmina aqui, que tem uma importância para o mundo, mas geopolítica maior para o Brasil, a gente tem o chamado aqui tarifaço, né, que é um Executive Order de 30 de julho de 2025, no qual, usando o International Emergency Economic Powers Act, o National Emergencies Act, a seção 604 do Trade Act de 1974, e aí esse elemento é mais técnico, mais forte, a seção 301 do título 3 do United States Code, o Trump diz, olha, o Brasil está sendo um país fora, digamos assim, daquilo que a gente considera como free trade, tem práticas anticompetitivas, como, por exemplo, os do PIX, e ele simplesmente diz, a gente vai aplicar uma tarifa de 50%, né? A gente sabe que existe uma série de motivações geopolíticas e da política interna brasileira por trás, mas talvez o grande desafio que a gente tenha daqui para frente é entender como as cortes americanas vão reagir a isso. Existem já recursos pendentes sobre esses poderes que foram autoconcedidos por um ato, que é o National Emergencies Act, que é criado para emergências, e não me parece que a gente tenha uma emergência, nem que as justificativas dadas no decreto do Trump sejam justificativas que permitam quintuplicar, digamos assim, as tarifas anteriormente aplicadas. Então, a gente está em um cenário em que as cortes americanas terão um papel relevante dentro dessa análise, e, ao mesmo tempo, nós, como estudiosos do direito tributário, que tem uma zona de convergência, uma zona de intersecção muito grande com o direito do comércio internacional, o direito aduaneiro, e aí a gente está nessa zona de entender se os outros países, e no caso o Brasil, vão ser recíprocos nessa tarifação, e de outro lado, como as cortes estrangeiras vão reagir a esse processo, já que a OMC, que deveria ter um papel regulador internacional, está em uma situação bastante precária, né, com quase um impedimento ao seu funcionamento regular. Flávia, eu tentei cumprir meu tempo com 20 segundos dentro daquilo que ainda era disponível no painel, mas quero dizer que fico muito feliz de... Vocês estão vendo aqui meu cenário, eu estou no Rio de Janeiro, no hotel, mas já estou descendo aí para o Congresso pessoalmente para encontrar com os amigos aqui que estão no Congresso. Obrigado, Flávia.
Tá ótimo, Jonathan. Obrigada e desculpas novamente. Realmente isso é um tema muito interessante. E vou já encerrar aqui. So thank you, everyone. It was great having you all on this panel today. Bye.